Welcome to the Real Estate Show on KMED. July 8th is our day, 2017. Pete Belcaster and Joe Brett, the Real Estate Guys, with you. We're both real estate brokers with John L. Scott in Southern Oregon, and we get together with you once a week here on KMED to, talk about all sorts of real estate-related issues and topics, and start the 9th year of being with you here every Saturday. 9 years worth, Joe Brett. That's a long time.
You
were younger then.
I was younger then. You're really on your A game today too. What's got into you? It's almost like
it's midsummer. It's like the summer fun, right?
It could be the guy that kind of keeps us in business, keeps the real estate show in everybody's ears is with us as well. You got your good game on today.
Well, Jim Remley, who's the managing principal broker at John L. Scott, the Medford and Ashland offices, is with us today. We invite Jim in usually at the beginning of the year, in the mid-year, to give us reports of what he sees the market is doing, because certainly when you run the successful office like John L. Scott, you have the pulse of what in the world's going on, right? Is that what it is? Is it fair?
Yeah, we try. We work hard. Thanks for having me back. I'm excited to be here.
It is. So tell us, was mid-year here, what has the first part of this year been like for the real estate market? Because I'm telling you, this is going to be a heck of a year by the time we talk about this in December.
It is. I mean, when we entered the year, I think when we talked at the beginning of the year, we talked about supply and demand. Yeah. And supply and demand, is the ultimate determining factor of any market, how well you're going to do. We're suffering from low supply. It's no secret in this market. And it's definitely a fear at the beginning of the year. Geez, we're going to have not quite as good a year because we just don't have enough to sell. I have to say that we've had an exceptional year despite that.
Really?
And, I give it up to every realtor in this community. We're out there digging under rocks. We're, talking to everybody and, we're talking to people that are thinking about selling, and we're finding things to sell. And that's amazing. At John L. Scott, we're actually beating our numbers from last year, which is extremely hard to do. We had a fantastic 2016, but 2017, last 3 months, we've had over 300 sales each month. And it's a testament to the hard work of realtors that are out there serving their clients every day.
Is it coming from certain places, Jim? Or tell us where these sales and all this is coming from, because listings are still not necessarily, they are coming up. I will say that the last few months, but they're not simply where they were even a year ago.
Yeah, I think what's interesting about our market right now is if we just looked at the market snapshot earlier this week, and we look at it by price band. And when you look at our price bands, I mean, typically in any market, your lower price properties are the ones that sell the fastest, obviously.
Sure.
But what we've seen over the last 6 months is that the speed of the market, the pace of the market is actually starting to creep up into the higher tier markets and the higher tier price bands. So we're starting to see properties that are $500,000 to $750,000. Actually, just to give you an example, we have a 3-month supply of those based on that price band for last month, which a 3-month supply is incredible. Typically, in a market, that would be like a 9-month supply, a 12-month supply, even a 15-month supply would be pretty normal when you get up into those higher price
price ranges. Sure.
Even $750,000 to $1 million, we have 7.6 months supply. So it's amazing. Even when you get to the higher tier markets, there's still low supply, and it's pretty amazing. So people that are maybe have been on the fence about selling some of those higher tier properties, this is the time to go. This is the time to sell.
Yeah. To sell in the higher tier ranges now.
Yeah. That market's really hot right now. We just closed one. I think it was the highest one in MLS. Last week is over $3 million.
Really?
Yeah, absolutely.
And to your point, I think agents are really having to cultivate their contacts, be in touch with their potential sellers. Yeah. Is the timing right? Have you come back far enough? Is it time maybe, to be able to downsize and you're having to really dig for listings where otherwise, your sphere of influence would kind of feed them to you. And right now it's you got to get out there and kind of work for those. Yeah.
One thing that we talk to our buyers about at John L. Scott is that we just don't look at the MLS. The MLS is our first stop, of course. That's every listing in the market, but we have to go deeper. We got to look at for sale by owners. We have to look at expired listings, things that were on the market, that maybe they were unsuccessful selling the first time around. I mean, we used to talk about going back 6 months, but I see agents going back 2 years, 3 years, 4 years, even 5 years in those searches, and they're calling all these people to find listings to sell to their clients.
To try to find the right house for the client.
Yeah.
Dig.
You got to dig to find them when they're not just sitting out there being posted. Yeah. What has this done, Jim, with the properties in the lower price ranges? How is that? I mean, it just seems that those are continuing to have struggle. I mean, they're going quickly, I guess is the thing.
Yeah. I mean, really under $350,000, we are what we call in the industry sold out. Not truly sold out, but what's happening is we have less than a month's supply. So what that means is any property that's priced right when it comes on the market is going to get a massive amount of activity and probably sell very quickly, and often with multiple offers.
So you're still seeing multiple offer
Absolutely.
situations with agents and dealing with those.
Absolutely.
And we always talk about this a lot, Joe. With when you find yourself as the buyer, even the seller in multiple offers, what's the advice that you kind of give, Jim, to these sides? Because I know people get very frustrated. It's an emotional thing.
Yeah.
And some people don't want to get involved with multiple offers and just pull away. So
Sure.
what's your advice to that?
One thing I would say to a buyer, that's looking at this market and saying, wow, I just don't want to even participate in this. This is crazy, right?
It's a crazy market.
It's a crazy market. I would say, you got to look at what your end game is. And here's the challenge with it. If you wait, what's going to happen is prices are going to rise, and they're continuing to rise. Right now in our market, prices are going up about 1% a month on average. So if you wait 6 months, the same home that you want to buy, that's $300,000 is now going to be, $18,000 more.
Yep.
At $200,000, it's going to be $12,000 more.
Right.
So the longer you wait, the more it costs. So my suggestion is, get out there and look for a property, find a great realtor, and find the home you want to buy, because you want to lock in that price today, because prices are going to rise.
And I was really surprised this spring and into early summer as I was doing research for my buyers that are looking in the Eagle Point area out there. I went back 6 and 9 months, and the sellers were getting over 99% of their asking price consistently.
At that prime.
So
Wow.
there's no low balls out there to be had per se, unless you could find a foreclosure or something, a distressed property, some sort, which are almost impossible to find right now anyway. But the sellers really are in an advantageous position, and if they're priced right, they're getting their asking price.
When you're asking about specific things that a buyer can do, though, Joe and Pete, there are some things that they can give them an advantage. One of them is to get pre-approved with the lender right out of the gate.
Yes, and I was just going to say that we had a show with that about pre-qualifications. That I've been doing that a lot, and I tell my buyers right now, we're not even going to go until you have that pre-qualification letter, available to us, because we're going to get into the multiple offer situation, and the seller is going to want that letter now. And if we don't have it and the other guy does, we're not going to get the house, right?
Yeah, and something else that goes along with that pre-approval. Don't make the mistake of saying, well, I have one, but it's from lendingtree.com or one of these online not I'm picking on LendingTree,
Right.
but any online provider. Because what happens is people want a local lender. When you're dealing with the seller and they've got 5 offers in front of them, 3 of them are with local lenders or 2 of them with outlet state lenders or online lenders, they're always going to pick the local lender.
Interesting.
Because the local
Okay,
lender
yeah.
knows the local landscape,
Yeah,
right?
yep.
And that's what as a listing agent, that's what we'd encourage our sellers to do.
Yeah.
So get a local lender.
That is really, I didn't realize. I've never come across that from with a Lending Tree or one of the online.
Right,
We
right.
always use local lenders.
Yeah.
And you're right. I guess if I'm a seller and I've got some offers, multiple offers, and 3 of them are from some website somewhere, you're right. You're going to take the local guy. You're going to do the
Absolutely.
local guy.
I'm going to have more confidence. I'll get a response if an issue comes up and
Yeah.
all of that.
Yeah.
Exactly.
Man.
Interesting as that goes. What else are the things in the market that you're looking at that you're seeing going on around outside there?
With the multiple offer situation, we're seeing a lot of what we call escalation clauses. So an escalation clause simply means that as a buyer, I come in and I make an offer, whatever my base offer is. But I also include an addendum, which is the escalation clause that says I'm willing to go $1,000, $5,500 higher than the next competing offer, up to a certain cap. So to give you an example, I might offer, if it's a house is worth, asking $300,000, I might say I'll offer $300,000, but I'm willing to go to $315,000 or $1,000 over the highest competing offer. And so, yes, it's really aggressive, but we are seeing more and more escalation clauses out there. One thing as a buyer, when buyers hear this, like, wow, that's kind of scary. But the thing to remember is that about 75% of most buyers are going to have a lender involved. And the lender is going to then get an appraisal, right? So the lender's going to say, we're going to appraise this thing. And they don't care about your escalation clause.
No.
What they're going to say is,
Right.
it's worth what it's worth, and we're only going to lend you what it's worth.
Yep.
And so when you get that appraisal back, if it didn't appraise for the price you agreed, you're going to have a way out because the sale is subject to your financing.
Right.
So it's kind of a backstop that will allow you to have something to negotiate on later.
All right. Now, if I'm a seller and I see an escalation clause, okay,
Yes.
and I'm the seller now.
Right.
Do I have to take that? Do I have to sign that document, or can I just ignore the escalation clause? I've had different.
Pete, you're so sneaky.
Well, I've had different
Wow, look at
people.
this guy. No, you're exactly right.
Okay.
So here's the danger of an escalation clause. The escalation clause, the advantage is it can put you in a position to push out other buyers and you secure the property so you lock it up. The danger for you as the buyer is the seller now knows what you're willing to pay.
Yeah.
So they could say, oh, I see you're willing to pay $315. I'm just going to counter you back at $315. And they don't have to abide by that.
They don't even
escalation
have to
clause.
abide by that.
Now, I will say that we've closed 2,500 transactions last year, John L. Scott. I'd say, 95% of sellers that do receive them do abide by the rules.
They do? Okay.
Yeah, most do. I mean, there's a few that don't, but most do.
All right. Well, see, those are good things.
Those are the sellers you want.
Gosh, and it makes me think if the seller might even put in a caveat that if it appraises high, you've got to meet that appraisal. You've got to have the cash to finish the deal.
Yeah,
really.
True. Yeah. Brad Bennington, the CEO of the Southern Oregon Builders Association, was with us last week, and we were talking about new construction, the things that goes on. Joe attends all these planning commission meetings all over and land use hearings. New construction, is that are we seeing that come back from your viewpoint, from the that selling standpoint?
We are seeing it come back. We need a lot more. We're not building in nearly enough homes to meet demand and building enough homes. So what happened in the downturn is all the local small builders, guys that were building 5 homes, 6 homes, 1, 2 homes a year, they all got wiped out in the downturn.
Right.
And still to this day, there is really no spec home loans out there from a local lender. I can't, as a local small guy builder, I can't go to the local bank and say, hey, give me a loan. I want to build a spec house. That's not available.
They're not doing that.
They're still not doing that. So what they're forced to do is go to investors. And there are investors that are now into that market, but what was left at the end of the downturn was just your big builders that had big, deep pockets. And so right now we're just starting to see people coming back, the local small builder. That's what we need. We need a lot of local small guys coming back to the front. John L. Scott would love to represent them all. And we need them to start building 1, 2, 3 houses. But because you add up 10, 20 of those small builders, that can start to fill the gap, right? So we need it all. We need big builders building more, but we also need the small guys coming to the market.
And the big builders are maxed. Their jobs are planned out months, even a year ahead. And their subs are all hired. I mean, we need that secondary force that was such a driving factor in our boom.
One thing I've seen, and this is, I mean, I know you guys see it too, but as I was driving in here, I see Pepsi across the street's got signs that says help wanted. Everywhere you go, there's help wanted. Everywhere you got is help wanted. You can't get a job in this market. You got a problem because there's help wanted everywhere.
Well, I think the unemployment is the lowest in Jackson County. It's since the 70s right now. Okay.
But one thing that I've seen, which I've never seen in my 28 years in the business, was I saw a call to action from the Home Builders Association for them looking for apprentices for plumbers and electricians and carpenters. I mean, and so these guys, part of their problem with builders is they just don't have enough subs. And so because what happened in the downturn is all these subs went and got real jobs, feed their families, right? Yeah. So they got out of the industry, and now there's a gap there. So we're having to kind of recreate a workforce that to some degree evaporated.
And we got to get on the ears of the young people out there of what the opportunity is in those apprenticeships. Those are family wage career jobs where you could someday be your own contractor and have your own company and have learned the ropes and really are in a position to take off and make it go.
And it's such a great thing for the economy. Every new home built, I just saw a study on this, creates 3 new family wage jobs in every economy.
Really?
I mean, that's a massive difference.
Yeah.
I mean, we start building a lot of homes. We start building build bigger, more robust economy.
That builds the economy.
Okay. Which leads to the question of what are we building? What types are we building? We've had discussions and people sitting where you are from Southern Oregon Tiny Homes and the Oregon legislature. We saw that is going to change, is changing the rules regarding the codes for those for those types of things. That could open up a whole nother real estate market actually just on those kinds of things. But alternative housing, we just are suffering like every place in the country with not everybody wants a 3 and 2 on the
nor can afford
nor can afford them. And that's the real problem it seems that we're facing.
Yeah, affordable construction is you don't see a lot of new construction under 300,000 today. Most of it is over 300,000. We fortunately represent several builders that are still building in that 250,
250, isn't it? Is that what kind of the new things are? Yeah.
So that's the sweet spot of the market. That's where the real need is, 250 to 350. So we need more builders building that. Part of it's lot cost. Part of it's having, as the markets improve, the lot costs improve, and it makes it much more difficult to get to those numbers. People that are still building at 250 or 350 had those lots for years.
Yeah.
You're right.
Do you see, as we're going to have a break coming up here, and we'll get your opinion on investing right now in real estate, because I don't know if you've seen it, but I've seen a lot of multiple units on the market lately, and I'm wondering. People ask me, some potential buyers are going, are they selling these things because of the new laws that are coming out of Salem, which are making it, no cause evictions, kind of a thing of the past? Are they selling these things right now because of that? That's a good question. I don't know if they are or not, but I sure see a lot on.
Yeah, I think there's a fear of that. That law hasn't passed yet.
No.
So there is a fear. I think when you look at the market, you got a lot of mom and pops that own 1-2 units. Those are the people that are going to probably sell with the fear of that.
Yeah.
Right, yeah. But the larger ones are still there. And, of course, we still need that type of housing out there, right? I mean, it's not going to go away. The need for seniors, the need for veterans, it just doesn't end, and that's one need that we're not fulfilling at all. Hey, we're with Jim Remley from John L. Scott here on the Real Estate Show today, and a John L. Scott Market Watch. We're going to get Jim's opinion on what's going on in the marijuana world. How is that changing real estate here this year? All that and much more when the Real Estate Show continues here on KMED right after this. The Real Estate Show rolls on KMED. July the 8th is our day. Pete Belcaster and Joe Brett, the real estate guys, with you here today. Next week, the Rogue Valley Association of Realtors will be along with their education shows. My goodness, next week is with the Jackson County Fair. Isn't that next week? It's next week, I think.
Really?
The 12th? Yeah, I think it is. Yeah, well, remember they got that big Bi-Mart country
the
crossing thing at the end of July, and so
whoever thought Keith Urban would
no, it's the fair
at the expo. That's pretty big.
Well, you go
pretty
from
impressed.
We go from 4th of July right to the fair, man. It's
I thought it was big when I
summer.
saw Bachman Turner Overdrive out there at the expo. It's kind of kicking it up a notch.
There you go.
Today on the show, Jim Remley is the managing principal broker at John L. Scott in Medford and Ashland offices, and well, one of the things that Joe and I have always enjoyed is listening to Jim as he explains real estate and this whole market. And that's why he's with us here today, giving us our kind of a mid-year report here as we sit in the middle of July. And just looking ahead before we other things,
Sure.
The rest of this year is going to be really a busy real estate rest of this year, don't you think? I mean, I get that sense.
Yeah, it's definitely what we call a frenzy market. I mean, there's just a lot of activity happening. The biggest challenge again, supply. But one thing that's happening is we're seeing sellers starting to finally. We just saw a study that came out from the Home Study Report. Realtors do it nationwide, and they survey the confidence level sellers have and the confidence level buyers have. And we just have now starting to see sellers finally say it's a good time to sell. And so they've resisted that kind of overall for like the last 5 years since the downturn. But finally not today, but the last quarter, they're starting to say now is a good time to sell. And we're hopeful that that'll turn the key and we'll start to get more people coming to the market.
Because it's potentially a problem, Jim. We cannot sustain 1% a month.
No, you
growth
can't. It's got to stop.
in the housing market, and the supply has got to increase in a number of ways, and more people have got to be able to get in the game, and more sellers have got to get in the game.
You come to a cliff where you're sold out and you literally can't sell anything.
Yeah.
So we're not there yet, but we're close. So we need to get more supply on the market.
Yeah.
The one thing that happens with sellers too is there's kind of a self-fulfilling prophecy in that sellers look at the market themselves and say, wait a second, there's not enough supply for me to buy my next house.
Right.
And so you get this catch-22 where they want to sell, but they're like, well, maybe I'm a little bit nervous about this. Now, John L. Scott, we've developed some tools and some strategies to get around that scenario and protect our sellers so that they don't get caught, with, hey, I don't have a house and they're homeless. And we never allow one of our sellers to get in that position. So we have some strategies and some techniques to help them get around that.
I want you just to elaborate just a little bit
Sure.
on that, because what do you say to people? I mean, I'm in that boat, I want to sell my house, but I have no place to go.
Right,
so
right.
What should a person in my situation, what do you do? I mean, I don't know what to do.
Well, step one would be we'd have you come in the office, talk about what your dream house is. What do you want to be in?
Yeah, that's a problem
if
too.
If you say, I
don't know what that is.
on some octagon house on a lake or something, it's impossible. We'll get, that's one
Yeah.
thing. But we identify what your needs are, and then what I would do is I would take you out as a buyer, even though you haven't sold your house, and I would show you a few homes. And what if we can do this would be fantastic is show you that there are some homes in the market that you could potentially purchase. Okay. And then worst case scenario, let's say there's nothing in the market today, but we know there's always a new listing around the corner.
Sure.
Every single day there's new listings hitting the market. One of the things I would suggest is let's put your house in the market, but we can protect you by saying your sale is contingent on you finding replacement property. Now, that's not ideal because most buyers don't want to see that.
The buyer doesn't want to see that you
can
can get out of the house by a certain time.
Right.
What's a common time frame that a seller could do that with? Could you say
not long.
60 days, 90 days, too many kind of thing?
90
or-
days is way too long.
90 days is too long.
I'd say
Okay.
30 days to 60 days is probably the range.
Because
Because the buyers
sometimes-
are trying to land. They've been working really
yeah.
hard to
They're not
land.
gonna wait.
Yeah.
I mean, I know I know several sellers who have put their stuff in storage,
Yeah.
and gone into like an apartment or something for a few months until they found a place. They
Now-
can find a place as well.
And I would suggest that, if you have that ability as a seller and you say, hey, I have a place to go, I have another rental I can move into, I have my family I can move into their house, whatever, it gives you some real strength to have closed your house and have cash in hand and be ready
Yes.
to instantly make an offer and not make it contingent on a sale.
Yeah.
It's very powerful. The other thing you can do is rent your house back from the buyer. And
Sure.
I'll give you a classic example. It was me
Okay.
myself. Last year, I bought a house, and when I bought that house, the seller in the negotiation started to get cold feet for exactly this reason. They said, we're rethinking selling, Jim. We don't know if we want to sell now.
Uh-oh.
And I said, well, wait a second. I've got a solution for you. How about this?
Yeah,
How
about this?
I'll allow you guys to live in the house. You can rent it back from me for up to 6 months. So I gave these sellers 6 months
Wow.
to find replacement housing. And we closed, and I owned the house, but they rented the house back from me.
Okay.
I will say it took them all that time to
Yeah, I
find
was going to
a
say,
house.
did it take them took them
some
6
time.
months?
Yeah. They were wanting something very special and something very unique,
Mm-hmm.
so they weren't a standard buyer, but they found what they wanted, and we were all, very friendly, and it was very amicable. So if you're a buyer and you're coming into a situation where you see that, the sale is subject to replacement housing, if you have the ability and maybe you're renting a house now and you don't have to move necessarily immediately, give that seller that opportunity. It could, in a multiple offer situation, give you a real advantage to say, hey, Mr. and Mrs. Seller, you know what? Don't rush it. You take your time, find the perfect replacement property. I guarantee you, your offer is going to probably be looked at very favorably then.
Yeah, it absolutely does. Well, let's see it. Some of the different things that you can do.
Yep.
Tell us about your experience right now. We've talked a lot about recreational marijuana and all the things that it's affecting real estate
That's just you,
in the market.
It really is.
It's so funny. I asked Lennox Scott this. It's still Washington State's a totally different world from marijuana in real estate than it is in Oregon. It
Right.
truly is different. Anyway, but it obviously is affecting. It's just having an effect on us, and it's going to get more and more. What was it, Joe, in the Mail Tribune? There was a story about folks
good
in
peoples
Williams
out in
upset.
Williams,
The big grows.
They have been the center of the universe for medical marijuana growing in Oregon, licensed through a certain number of patients, so they are very manageable grows, and they were neighbor friendly. Now the big recreational opportunists have come in there, snatched up that land, and they're doing major grows, and it's impacting the quality of their life. So here's a place where was no more place more marijuana friendly than that Williams area. For these last 25 years that medical marijuana was in place, and now they're one of the first ones that's asking Josephine County to ban any more large-scale grows in that district out there because of the problems that are coming in the quality of life.
Did you anticipate this? Did you see this coming?
I didn't. I'm kind of shocked by that, honestly. I would have thought that would have never happened. But I can tell you from our perspective in the real estate world,
Right.
It's every single day, multiple times a day, that we have buyers calling in from all over the country saying they want to buy EFU land, zone land, agriculturally zoned land here in Jackson County for specifically that purpose, to grow marijuana.
Right.
So it is
Still that
definitely-
much. Still,
Oh, absolutely.
Still that much today.
It's a green rush. It's an absolute green rush.
Now, 2 years ago when we were sitting here talking about it, and it hadn't been legalized, you remember, it hadn't started until October,
Yep.
2 years ago. And at that point, people were just would just pay anything, it seemed like, for land, right? I mean, it was going
A lot
crazy.
of them bought real residential,
And they
too.
bought- They bought it.
Yeah.
Whether it had
little
water or
before their
not.
time,
I mean,
yeah.
it was
Yeah.
the wide open West
Yeah, it
out
was,
here.
yeah.
Now it's changed 2 years later.
So let me give you a prediction for this.
All right.
So looking at our crystal ball, we can never accurately predict everything, but I can tell you that, in my opinion, there's going to be a point at which we'll have saturation.
Yes.
And the saturation will then impact the real estate market in this way. That once people say, "Hey, wait a second, there's only so much pot that can be grown in one area,"
Right.
or only, if you look around, it seems like there's a pot store in every single corner of Douglas and Jackson County now.
I know.
At some point, the market will reach a saturation point. The prices will drop on this, and they will not be able to support these huge land prices, right? So what will happen is these people that have EFU zone land will no longer be able to command that same premium. So if you have EFU zone land today, and you have any window, if you say to yourself, "Yeah, I'd like to sell my property in the next 5 years," don't wait.
Right.
Sell it right
You
now.
think now is the time?
Absolutely. Don't wait, because I don't think that you can say that this you could almost call it a bubble. I'm not going to call it a bubble, but the
green rush. I mean, we still call it the green rush.
The green rush is going to continue forever, infinitum. It's not. And as more states come online and they legalize marijuana, you're going to have more and more and more states to do this in. Oregon won't be the only place you can do it. You can do it almost anywhere, right? So it's going to continue to grow. So I just say, be careful. Don't think that this price appreciation in EFU will last forever. It won't. Take advantage. Sell. If you're going to sell in the next 5 years, I'd recommend put it on the market
now before it's going to, because it will be coming down at some point.
That's my opinion. Everybody has an opinion. That's my opinion.
What's going to happen to the EFU lands when the price has gone so low that the value of that land, now you're stuck. You better make your money now if you own that property.
Absolutely.
You better get it in the bank now.
Take it now.
Isn't it just amazing what goes on around us in the real estate market?
It's
always
something.
It never slows down.
Yeah.
We've got one more segment to go. We're with Jim Remley from John L. Scott in our Market Watch show today on the Real Estate Show. Don't you dare go away. We're coming right back to KMED right after this. Real Estate Show continues here on KMED. July the 8th is our date. Pete Belcastro and Joe Brett, the Real Estate Guys, with you. Don't forget, you can check out any of our past shows at realestateshoworegon.com. And, of course, if you need any real estate help or assistance, Joe and I are certainly willing to help you there. Valuation of your homes, you can give us a call. You can check us out via email at Pete or Joe at realestateshoworegon.com. Jim Remley, he's the managing principal broker from John L. Scott's in the house here today at KMED. Interesting discussion so far. I mean, I've learned a lot once again, about the market, what it's doing. It's thriving. It's hot. Like the weather is outside.
We get to hear enough from Jim Remley and Jeff Rogers that it puts us in a good place to help our clients. And we get the cutting edge of what's happening in our market and how to help our clients is the bottom line. Buyers, sellers, whatever it may be.
Yeah, I just want to finish up just the marijuana thing. I know, hear from the commissioners. You go to those commissioner meetings, and you were saying that more and more citizens are stepping forward about this issue of the grow sites, the kinds of direct sites and things like that. And don't be afraid to do that if our listeners, because, I mean, it's our community. We need to stick to, do your thing there.
Boy, and, these are people, I've never seen people show up very often to speak to the county commissioners in the open forum time, but it's happened several times over the last couple of months, and they're coming in because they are really concerned, and one with grandkids that are living across the street from something they never bargained for.
Right.
And these are people
didn't vote for
these
this
are people
stuff.
that can't just pick up, sell their rural place and move.
Right.
It's a pretty limited market in that respect. So there is some something on the horizon coming where we're going to have to find a balance.
It's fascinating to watch it. We're with Jim. I wanted to ask you about, what about investing today? One of the things we always talk about, buy, sell, rent, invest. Is investment property right now out of the reach for people, or do you still think that's something that potentials are still there for investing?
Absolutely. I think the investment opportunity is actually greater than it's ever been, and I'll tell you why.
Whoa, okay.
Because a lot of times people think, well, investments have gotten too expensive, but it's all relative to rent. It's different than buying a house where you're basing it maybe on emotion or something like this when you're buying the property to live in yourself. When you're buying an investment property, you're strictly basing it on the rent income stream, right?
On your income stream,
on
sure.
your income stream. And that's really what you're buying, is an income stream when you buy an investment property. The reason why there's such a massive opportunity today is there's a delta. And the delta means this, that when I go and look at properties and I see one, let's just say a duplex, and I look at the rents, and the rents have been $650 for the last 15 years, and they haven't been raised. As an investor, I might say to myself, well, I know those can actually be maybe $750 or $800 for those rents, but their price is based on the $650 figure rent stream. Now I have an opportunity. I have a delta there that I can work with, that I can actually make a profit on. And so savvy investors recognize that delta. They recognize that opportunity, and they're taking advantage of it. So there's a huge opportunity.
And renting, I mean, raising the rents, isn't there a process now that they have to go through?
Not yet.
It has not passed. That still has not passed. That's back in that House bill that was.
I mean, you still have a lease, and you got to live up to that
Do you
lease.
only, but investing is more than just buying a rental unit, right? I mean, there's Airbnbs, there's commercial stuff out there.
Whole new ball game.
Is it still people should be, I mean, the ability to do this and want to do
absolutely.
it?
You know, I think real estate investing is so far superior to any other kind of investing in my experience.
Yeah.
And the reason
And you do it. I mean,
do it, yeah.
You're an investor as well.
I'm in escrow on a duplex today.
Okay,
So
all right.
I'm going to be closing the next couple weeks. So even in this market where you think prices have risen, you know, significantly over the last few years, I'm still buying properties.
Okay.
So I would encourage anybody that I know, friends and family, to buy property as well. So the reason why real estate has such a different advantage over other types of investments is, I'll give you an example. If I had $20,000, somebody hands me $20,000 today and says, "Okay, Jim, you can invest this. Where are you going to invest it?" And I invest that, let's say, in the stock market. And let's say the stock market does incredible and it goes up 10% over the course of another year, you know, the next year. That means I've made a grand total of $2,000.
$2,000. Right.
Yeah. I mean, it's great, but it's not like going to change my life or anything, right? So I take that same $20,000 and I buy a rental property, maybe a small house so I can find one for $100,000. I put 20% down, which is that $20,000, and I get a loan for the other $80,000. Yes, I'm getting a loan, and there's some risk to getting a loan. But now, because I'm using leveraged dollars, if the value of that property went up by 10%, it's not going up based on the $20,000 down. It's going up based on the $100,000.
$100,000 down.
So 10% of $100,000 is $10,000. And if I had $10,000 gain on my $20,000 investment, now I've had a 50% gain on my money over the course of a year. Now, is that going to happen every time? Absolutely not. But let's just take those numbers down. If you even went to a 3% return and you compared apples to apples, you are going to beat the stock market every single day of the week. Yeah. And there's massive other reasons to do it as well. You had a 1031 expert on here last week. Fantastic show, by the way. Good job, guys. But with you 1031, when you go to sell that property, that investment property, as long as you've owned it a certain period of time, you can then take those funds and 1031 them or exchange them into another like kind property, real estate for real estate. Right. So if I sell my duplex, I can buy a single family home, I can buy a piece of land, I can buy anything I want. I can do that and defer the tax, so I don't have any tax consequence there. I can't do that with stocks.
No, you can't.
I sell that stock, boom, I owe a tax. If I have a gain, I pay that right then and there. So if I continue to do that over the course of my investing career, and let's say that's a 20-year window, I'm able to roll those funds and roll those funds and roll those funds so that I'm growing equity very, very rapidly. There's also other advantages. When a renter pays you a rent, you obviously have an opportunity to have a cash flow. But also, even if you had zero cash flow on a property, and I buy a lot of properties where I have zero cash flow, okay, that means I'm not making money every month, but they are certainly paying down my mortgage. So by doing so, I'm going to eventually, I'm still going to own that property.
Have you ever done a 1031 exchange in any of your investment proproperties?
Multiple.
You have done multiple of them. That obviously, if you're an investor, that's what it works. I mean, you want to do it that way, don't you?
I always give this example to my friends that are investors or beginning investors. I always say, well, here's one thing to think about. If I buy one property a year and it's worth $200,000, right? And I put that on a 15-year mortgage. At the end of 15 years, I'm going to have that first property paid for completely, $200,000. And then every year thereafter, I'm going to have another one paid off. Yeah. So if you can get on that road of buying one property a year, it's a great retirement plan.
And it doesn't really cost you a lot of money. I mean, you're just once you get into the game, you can just keep rolling and defer the taxes on the way down the deal. Interesting, isn't it? We're almost out of time here today. John L. Scott, you had a fabulous year. We're going to have another good year. You're excited about this, I know, and all the agents and everybody. It's a great team, and it's fun to be there. And
thank you from your agents and your team.
The market is amazing, isn't it?
We have 18 full-time staff people, 160 agents. We're on track to do about $1 billion over the next 18 months. It's exciting times to be at John L. Scott. We're rocking and rolling, man.
That's outstanding.
Market is just here in midsummer is rolling along.
Hot as the weather outside in July.
It makes it for fun, and of course, lots of activity going on. A lot of people looking. A lot of visitors here coming from all over.
I want to give you guys a plug too, Joe, and you guys do an amazing job here, Pete and Joe. And if you have an opportunity to talk to them about listing your house, buying a house, these guys are the guys to talk to. You can also visit us on our website, johnlscott.com, and download our app.
All right. That'll do it. Thanks, Jim. You have a good summer, and we'll talk to you.
Great show.
Hey, we'll see you in several more months as well.
Thank you.
That'll do it for the Real Estate Show here on July the 8th. Pete and Joe, the Real Estate Guys. Have a great week, everybody. God bless you all. We'll talk to you next Saturday right back here on the Real Estate Show on KMED.
You've been listening to The Real Estate Show on KMED Radio, presented by the Rogue Valley Association of Realtors, along with John L. Scott Real Estate of Southern Oregon and Bank 34 Mortgage. For guest contact information, download our free app, or to watch a past show, visit us online at realestateshoworegon.com. This show is produced by Table Rock Productions. Join us again next weekend for Southern Oregon's one and only Real Estate Show on KMED. And thank you for making the Real Estate Show part of your weekend.